Committee will come to order. Without objection, the chair is authorized to declare recess of the committee at any time. Without objection, all members shall have 5 legislative days within which to submit additional materials to the chair for inclusion in the record. Quorum being present, we now proceed with today's business. I yield to myself for an opening statement. Today, the committee is meeting to consider another important series of measures. These are designed to deal with market stability and security to the financing of illicit activities. These bills represent months of dedicated efforts by their sponsors. I want to thank members on both sides of the aisle who continue to work hard to get these bills in front of the committee. On our docket today is H.R. 5749, the Options Market Stability Act, introduced by Mr. Holtgren. The bill works to implement better capital rules as it relates to options and more accurately reflect exposure and promote options market-making activity to continue to promote greater economic growth in our country. The committee will also consider H.R. 5953, sponsored by Mr. Loudermilk and Mr. Sherman. The Building Up Independent Lives and Dreams Act, or BUILD Act, it is cleverly named. It will address challenges charities face with respect to the Bureau of Consumer Financial Protection's disclosure requirements. The cost and complexity of the almost 2,000-page TRID rule has put an undue burden on certain charities, has hampered their work. This bill will help address that unfortunate circumstance. We will also consider H.R. 6035 by Mr. Budd, the Streamlining Communications for Investors Act, which is a strong effort to address certain complexities within the Securities and Exchange Commission's regulations on well-known seasoned issuers to update and modernize the process of investor communication. The committee will also take up H.R. 6069, the Fight Illicit Networks and Detect Trafficking Act. The bill introduced by Mr. Vargas will help in our efforts to combat human and drug trafficking through virtual currencies and online marketplaces that unfortunately are used to buy, sell, and facilitate these illicit activities. These are the measures that we will consider today, and they are a very, very important part of the committee's efforts to continue to protect our consumers' access to credit, to continue to strive for 3% plus economic growth, which is historically where all of our job creation, all of our income increases, and all of our poverty reduction. The lion's share of that takes place in 3% plus growth economic years. So this committee will continue to be focused on achieving that, as well as the security of our people. And I want to thank all those who participate in the Terrorism and Illicit Financing Subcommittee. They continue to turn out very good bipartisan work. Again, I want to thank sponsors and co-sponsors on both sides of the aisle for what you are doing for this committee and the American people. You'll about the balance of my time. I now recognize the ranking member for an opening statement.
Thank you, Mr. Chairman. Mr. Chairman, it is disappointing that this is the second markup this month without any major legislation on the agenda to help America's most vulnerable families or hardworking Americans struggling to make ends meet. I will note that there are some productive bipartisan measures on the agenda that I will support, including H.R. 6069, a bipartisan bill that would require the GAO to study the ways in which virtual currencies and online marketplaces are used to buy, sell, or facilitate the financing of goods or services associated with sex or drug trafficking, and H.R. 5953, a bipartisan bill that would allow nonprofits such as Habitat for Humanity that are eligible for tax-exempt charitable donations and are making zero-interest mortgage loans to choose the mortgage disclosure forms they will use. Mr. Chairman, I understand that the Counter-Terrorism and Illicit Finance Act, a bill to reform the Bank Secrecy Act and Anti-Money Laundering Act framework that was noticed for this markup has been pulled from consideration so that it can be modified. I urge my colleagues on the other side of the aisle to strengthen the bill and make sure that it addresses the issue of beneficial ownership and the problem of anonymous shell companies. Currently, it can be very difficult to identify who the beneficial owner of a company is, which allows bad actors to circumvent U.S. laws to launder and hide money or to exert influence. This is a considerable problem in the real estate sector, which, of course, this president is deeply involved in. Press reports have indicated that since Donald Trump's election, anonymous shell companies now represent 70% of the purchasers of Trump properties. Without reforms to address beneficial ownership, it is very difficult to know who exactly is behind these purchases and what they may be seeking in return from this president. This is a serious threat to our national security, and it must be addressed. The Fraternal Order of Police called this decision not to include a section addressing beneficial ownership in the bill almost criminal. So let's not miss this opportunity to make sensible reforms to the Bank Secrecy Act and fix this significant problem of anonymous shell companies. Mr. Chairman, I also understand that there may be a third markup later this month. I again call on you to include some Democratic bills to benefit vulnerable families in that markup, such as my bills to address the homelessness crisis and revitalize public housing. Over 100 bills have been marked up by this committee so far this Congress. There's simply no good reason not to consider and debate sensible legislation to help the homeless and other vulnerable Americans. With that, I thank you, and I yield back the balance of my time.
Gentlelady yields back. Now pursuant to notice, I call up H.R. 5953. The clerk will report the bill which was distributed in advance.
H.R. 5953 to provide regulatory relief to charitable organizations.
Without objection, the bill is considered read and open to amendment at any point. The chair recognizes the gentleman from Georgia, Mr. Loudermilk, sponsor of the legislation, for 5 minutes.
Thank you, Mr. Chairman, and I appreciate you and your staff working with me and my staff to get this bill in today's markup. And I'd also like to thank my colleague, Mr. Sherman, for co-leading this bill with me and everyone on the other side of the aisle that has helped us to perfect and improve the bill, which I believe is a very important bill to actually help those who are the neediest in our nation to find a quality home and a place to live. Dodd-Frank required the BCFP to combine the TILA loan estimate and the RESPA closing disclosure forms into one integrated mortgage disclosure form called TRID. While TRID rule was well-intended, it helps to ensure that home buyers receive the right information when they are purchasing a home. The rule has had some unintended consequences, especially on nonprofits, such as Habitat for Humanity. The 1,888-page TRID rule is very complicated, and it includes sections on balloon loans and adjustable rate mortgages. These are things that may be relevant to traditional mortgage lenders, but they are not applicable to nonprofits that offer low-cost housing to needy families, and they cause confusion to Habitat home buyers, staff, and volunteers. The TRID disclosures were also designed to require software for lenders to comply with the rule, which has been costly for many local Habitat organizations. The vast majority of more than 1,200 local Habitat affiliates in all 50 states are small, community-based organizations with very small mortgage portfolios and few, if any, full-time staff. These organizations have experienced challenges with the cost and complexity of these new forms. To address these problems, my bill relieves charities from the cost and complexity of the TRID rule, but ensures that the material items of these, or the material terms of these mortgage loans are disclosed. Currently, all organizations making five or fewer mortgage loans a year are exempt from TRID and instead use the TIL, GFE, and HUD-1 mortgage disclosure forms. These are the same disclosure forms that were in place under TILA and RESPA before the TRID forms were established by the BCFP under Dodd-Frank. This bill simply extends this exemption to nonprofits which are eligible for tax-exempt charitable donations and are making zero-interest mortgage loans, regardless of how many mortgage loans they are making per year. Each local Habitat organization will be allowed to choose whether to use these forms instead of the TRID. The bill is supported by Habitat for Humanity International and the National Housing Conference, and at this time I'd like unanimous consent that this support letter from Habitat for Humanity be included in the record.
Without objection.
In closing, Mr. Chairman, I'd like to emphasize that the purpose of this bill is to help charitable organizations spend more time fulfilling their mission of providing low-cost housing to needy families and less time on regulatory paperwork. The bill provides relief from TRID to a very narrow set of mortgage lenders while still ensuring that the material terms of mortgage loans are disclosed. It recognizes that one size does not fit all when it comes to regulating these charitable organizations by giving them flexibility to choose which mortgage disclosure forms work best for them. I ask all of my colleagues to support this bill, and I yield back.
Would you yield to the chairman?
I do yield.
I want to thank the gentleman for his leadership on this provision. I would suspect a number of members of this committee, as myself, have previously worked on Habitat for Humanity homes. I can tell you, particularly in South Dallas, how important the work of this organization is, and frankly, similar organizations as well. So regrettably, we know that often Washington excels at unintended consequences. I think this was an unintended consequence. We do not want to do anything to dampen the good work of Habitat for Humanity or similar charities. And again, having them comply with the cost of the TRID world, to think that they would do fewer good works, or perhaps some charities not even be able to engage in the good works of this affordable housing program is just untoward. So I thank the gentleman again for his leadership. I hope this can be a strong bipartisan vote, and that the United States Congress can certainly help incent and protect and promote their good work. So I thank you. I yield back to the gentleman. The gentleman yields his time back.
Thank you, Mr. Chairman, for your support, and I do yield back.
Gentleman yields back. For what purpose does the ranking member seek recognition?
I move to strike the last word.
Gentlelady is recognized for 5 minutes.
Mr. Chairman, I want to thank Mr. Sherman and Mr. Loudermilk for reaching across the aisle to work on this bill. Some nonprofit organizations like Habitat for Humanity help borrowers who would otherwise not be able to afford a home by offering 0% interest mortgages with terms that ensure borrowers have the ability to repay the loan while also taking care of other household expenses. And oftentimes, these nonprofits rely heavily on limited staffs of volunteer labor to underwrite mortgages for families in need. Because of these unique dynamics, it is my understanding that some smaller affiliates of those types of organizations have had difficulty adapting to the new disclosures that are used to inform mortgage borrowers about the material terms and cost of their loans. This bill would give those nonprofits the flexibility to choose whether to use the Truth in Lending, Good Faith Estimate, and HUD-1 mortgage disclosure forms when originating a mortgage, or the TILA-RESPA Integrated Disclosure, or TRID forms. Even though these very narrow exemption already applies to organizations that make 5 or fewer mortgage loans annually, I hope we're all in agreement that extending the exemption to charitable nonprofits with a unique business model like Habitat is not an invitation for other types of lenders to take advantage of the carve-out in a way that could potentially harm borrowers. And if there is any indication that this bill is not narrowly tailored enough to keep bad actors out, we will need to revisit the language and add in additional guardrails. But I appreciate the bipartisan effort that went into drafting a bill that will assist nonprofits in providing affordable housing to those in need, and I urge my colleagues to support. I yield back the balance of my time.
Gentlelady yields back. For what purpose does the gentleman from Missouri seek recognition?
Mr. Chairman, I move to strike last word.
Gentleman is recognized for 5 minutes.
Thank you, Mr. Chairman. I want to thank the gentleman from Georgia, Mr. Loudermilk, first, as well as the gentleman from California, Mr. Sherman, for their fine work on this bipartisan legislation. The bill we will consider today, H.R. 5953, the BUILD Act, would streamline regulations imposed on 501c3s and charities working to provide affordable housing. In the wake of the financial crisis, Congress passed legislation that was billed as a solution to protect consumers and foster financial independence. Unfortunately, as the chairman just indicated, there's a lot of unintended consequences, and with Dodd-Frank, there were many. Instead, it resulted in some things that have hindered the ability of, in this situation, nonprofits to be able to extend mortgage credit in a cost-effective way. Habitat for Humanity is just one of those organizations that has felt the brunt of that restriction, meaning that those in need are left to face yet another barrier to safe and affordable housing. Mr. Loudermilk brought us legislation that would reform the regulatory regime to break down that barrier. Charitable organizations operate under different constraints than traditional financial institutions. They have different customers than traditional financial institutions. Certain mortgage rules simply should not be applied to them. H.R. 5953 is a reasonable bill that addresses a very real problem. It provides regulatory flexibility to charities so they can focus on their mission and continue to provide for those most in need. Mr. Loudermilk, the sponsor of the bill, indicated that there are still material terms and safeguards in this so that there is still the ability for individuals to take out these loans in a safe fashion. This common sense legislation is something I hope all my colleagues can support. I want to again thank the gentleman from Georgia and the gentleman from California for the leadership on this important issue. With that, I urge its support, and I'll yield back the balance of my time.
Gentleman yields back. For what purpose does the gentleman from Pennsylvania seek recognition?
Move to strike the last word.
Gentleman is recognized for 5 minutes.
I want to thank Representative Loudermilk for his work on this important piece of legislation. Access to affordable housing remains a challenge for many Americans. Unfortunately, some federal regulations have made this problem worse, not better. Nonprofit and faith-based groups can be important allies in the fight against homelessness. I have personally volunteered with groups like Habitat for Humanity to help Western Pennsylvania families. These groups bring people together to build communities and provide stability and permanence for low-income families. However, what we have found is that rules like TRID that were intended to protect consumers have actually made it more difficult for nonprofits like Habitat to help those in need. Representative Loudermilk's bill is a common-sense solution to right-size the rules for nonprofits that originate zero-interest loans. By passing this legislation, we can help groups like Habitat for Humanity provide housing for even more families. I urge all of my colleagues to support this bill, and I yield back my time.
Gentleman yields back who seeks recognition. For what purpose does the gentlelady from New York seek recognition?
Move to strike the last word.
Gentlelady is recognized for 5 minutes.
Thank you, Mr. Chairman. I would just like to take the opportunity to speak on behalf of the great work that Mr. Loudermilk, the gentleman, and also Mr. Sherman from California have done on H.R. 5953, Building Up Independent Lives and Dreams, or the BUILD Act. Tax-exempt nonprofit organizations serve communities across our nation on thin margins, stretching their scarce resources in order to meet the needs of those who they serve. Tax-exempt, in my district, for example, Habitat for Humanity answered the call to service in 2011 when floods ravaged the southern tier of New York, destroying homes and displacing entire families and communities. Ever since Habitat has supported the area by building and maintaining homes for those in need, even now in our recent flooding. It's vitally important that we fully appreciate the limited funds and manpower under which nonprofit organizations that make 0% interest mortgage loans operate. Developed under Dodd-Frank, TRID, or like to spell out, Truth in Lending Act, or the Real Estate Settlement Disclosure Act, these types of loans are really important and relevant to organizations like Habitat. Additionally, many smaller and mid-sized charitable organizations in our region lack the technical expertise needed to complete TRID forms or the funds required to purchase the required software. By allowing these institutions to use these good faith estimates and these resources, this legislation provides charitable institutions with the ability to use simple, low-cost mortgage disclosure forms. The BUILD Act is an important step in liberating proven charitable organizations from the burdens of unnecessary compliance costs, something that deters them from actually helping and serving the communities where they're located. I urge my colleagues to support this great bipartisan measure to untangle charities from regulatory burdens and allow them the flexibility they need to focus on their communities. Again, I commend my colleagues, Mr. Loudermilk and Mr. Sherman, for their leadership on H.R. 5953, and I yield back the balance of my time.
Gentlelady yields back who seeks recognition. For what purpose does the gentleman from North Carolina seek recognition?
Move to strike the last word.
Gentleman is recognized for 5 minutes.
Thank you, Mr. Chairman. And I want to start by thanking my friend, Mr. Loudermilk, for his leadership and hard work to get this piece of legislation to this point. I know this is an issue he's passionate about, and I'm glad we were able to mark up this bill today. I strongly support the Building Up Independent Lives and Dreams Act, the BUILD Act for short, which will relieve certain charities, like Habitat for Humanity, from the cost and complexity of the TRID rule. Mr. Chairman, charities like Habitat should clearly not be subject to these rules, which are obviously applicable to traditional mortgage lenders, not charitable organizations. Sections on balloon loans, for example, on the TRID forms are not applicable to groups like Habitat. The TRID rule also poses serious compliance challenges to certain charities, often forcing these small to mid-sized charities to buy costly software, which requires even more training. Again, this rule is clearly intended for traditional mortgage lenders. This is not smart regulation, and the BUILD Act fixes this problem. Mr. Loudermilk's legislation fixes yet another provision of the Dodd-Frank that was clearly rushed. And once again, we get this bill signed into law, charities like Habitat will go back to what they do best, and that is continuing to improve the lives in our communities by giving deserving families a home and a new shot at life. I urge adoption of this bill, and I yield back. Thank you, Mr. Chairman.
Gentleman yields back. Who seeks recognition? There being no further discussion or amendments to the bill, the question now occurs on ordering the bill reported favorably to the House. Those in favor shall signify by saying aye. Aye. All those opposed shall signify by saying nay. In the opinion, for purposes, gentleman from Georgia seek recognition.
Mr. Chairman, I move for a recorded vote.
Recorded vote has been requested. All those in favor of a recorded vote shall raise their hand and be counted. For a sufficient number having raised their hands, a recorded vote is so ordered, and pursuant to subsection C5 of Rule 3 of the committee rules, the vote on this question is postponed. Now, pursuant to notice, I call up H.R. 6069. The clerk will report the bill which was distributed in advance.
H.R. 6069 to require the Comptroller General of the United States.
Without
to carry
objection,
out
the bill is considered read and open to amendment at any point. The chair recognizes the gentleman from California, Mr. Vargas, the sponsor of the legislation, for 5 minutes.
Thank you very much, Mr. Chairman. Mr. Chairman, I want to thank you for including H.R. 6069, the Fund Illicit Networks and Detect Fine Trafficking Act, in this markup. Thank you very much. I appreciate the work of your staff and yourself. Thank you. I'd also like to thank Ranking Member Waters for supporting H.R. 6069 and for the great work of her staff. I particularly want to thank two of her staff members for working with my staff. Thank you very much, Ranking Member. I would also like to thank my colleague, Mr. Rothfuss, for his leadership on the Terrorism and Illicit Finance Subcommittee and for generously agreeing to co-lead this common sense, narrowly tailored legislation. As you know, virtual currency is a digital representation of value that can be digitally traded. Since the creation of Bitcoin, the first and most widely known example of a cryptocurrency, thousands of cryptocurrencies have emerged that are designed to serve a variety of purposes. Some forms of virtual currency provide a digital alternative to cash that lacks the oversight of a government or central bank and potentially offers greater anonymity than conventional payment systems. Just as virtual currencies have grown in use in legitimate commerce, they've also become an increasingly popular financial payment method for criminals. Virtual currencies have been and continue to be exploited to pay for the goods and services associated with illicit sex and drug trafficking. These are two of the most detrimental and troubling illegal activities sold online. According to the DEA 2017 National Drug Assessment, transnational criminal organizations are increasingly using virtual currencies due to their ease of use and their anonymity that they provide. While evidence points to the growth of virtual currencies as payment for the method of illicit sex and drug trafficking, the true scope of the problem and the potential solutions have not been fully established. According to the International Labor Organization, in 2016, 4.8 million people in the world were victims of forced sexual exploitation. And in 2014, the global profit from the commercial sexual exploitation was $99 billion. Unfortunately, virtual currencies are also being used as a payment method by transnational drug traffickers. As we all know too well, the United States is struggling to combat the rising number of lives cut short by the tragic opioid use. In 2016 alone, the CDC estimated that there were 64,000 deaths in the United States related to drug overdose, and the most severe increase in the drug overdoses were those associated with fentanyl and fentanyl analogs. Fentanyl is an extremely deadly opioid, about 50 to 100 times more potent than morphine. Fentanyl is being illicitly manufactured in China and Mexico, with most of the illegal fentanyl in the United States originating from China, and is readily available to purchase through online marketplaces. If we are to craft an effective regulatory and legislative solution to combat these transnational criminal organizations, we need to fully study and analyze how virtual currencies and online marketplaces are used to facilitate sex and drug trafficking to determine how best to eliminate their use. H.R. 6069 requires the Comptroller General of the United States to, 1, carry out a study on how virtual currencies and the online marketplaces are used to facilitate sex or drug trafficking, and 2, make recommendations to Congress on legislative and regulatory actions that would impede the use of virtual currencies and online marketplaces in facilitating sex and drug trafficking. It is my sincere hope that this bill is a first step towards crafting bipartisan legislation to impede and eventually eliminate the use of virtual currencies by transnational criminal organizations to facilitate drug and sex trafficking. I urge my colleagues to support this bill, and I yield back the balance of my time.
Gentleman yields back. For what purpose does gentleman from New Mexico seek recognition?
Mr. Chairman, I move to strike the last word.
Gentleman is recognized for 5 minutes.
Thank you, Mr. Chairman. First of all, I want to thank Congressman Vargas for the introduction of the Fight Illicit Networks and Detect Trafficking Act. This bill would require the Government Accountability Office to study and report how virtual currencies and online marketplaces can be and are being used for illicit means. The gentleman has described the many different ways in which the cryptocurrencies are being used. As technologies continue to change how we interact with the world, it's important that Congress is well informed of the potential risks and that we're able to assist law enforcement with practical legislative solutions. Illicit finance operates in a very fluid environment. We've had testimony that criminal enterprises are constantly adapting and evolving to stay ahead of law enforcement. In that vein, law enforcement again has testified to us that virtual currencies are an attractive way for exploitation because of their ability to transport across the globe, the low cost of quick resolution. In fact, law enforcement has previously identified an uptick in terrorist and criminal attempts to raise funds and launder money using virtual currencies. These online marketplaces, and especially those on the dark web, are becoming attractive arenas for bad actors to buy, sell, and advertise illicit goods and services associated with a host of their criminal activities. As members of Congress, we should work to remain as informed as possible about the current and rising threats around us. This bill is a first step to defining the issues surrounding cryptocurrency exploitation, as well as creating solutions to help law enforcement and protect our citizens. Again, I'd like to thank Congressman Vargas and Rothfuss for their leadership on this issue. It's imperative that we remain well informed on the potential risk of criminals exploiting our technologies and to further their schemes. With that, I yield back, Mr. Chairman.
Would you yield to the chairman?
Yes, I would.
I
yield
thank
to
the gentleman for yielding. One, I want to thank you for your leadership in chairing our Terrorism and Illicit Finance Subcommittee. Great bipartisan work has been done, and it is critical work for the security of our country. I particularly want to thank the gentleman from California, Mr. Vargas, gentleman from Pennsylvania, again, for showing how this committee can work across the aisle on vital measures that will be helpful, again, to the security of our nation. And when we look at the evolution of the dark web, when we look at the evolution of these virtual currencies, there is so much more that we need to know about this activity. But we know that typically bad players are on the cutting edge. We need to be on the cutting edge as well. So it is clear that our government needs to know even more about how virtual currencies are being used and abused in these illicit activities. And again, I just want to thank both gentlemen for their leadership. Otherwise, I certainly amplify the comments of the gentleman from California and the gentleman from New Mexico. I yield back to the gentleman from New Mexico, who I assume yields to the chair. Gentleman yields back, who seeks recognition. For what purpose does the ranking member seek recognition?
I move to strike the last word.
Gentlelady is recognized for 5 minutes.
I would like to join with you, Mr. Chairman, in thanking Mr. Vargas and Mr. Rothfuss for the work that they have done producing this legislation and the leadership that they're providing. I support H.R. 6069. The fine Trafficking Act, which would advance efforts to counter the illicit uses of virtual currencies and online marketplaces for sex trafficking and drug trafficking, particularly in regard to opioids and fentanyl. In 2016, there was an estimated 4.8 million global victims of forced sexual exploitation and an estimated 64,000 deaths related to drug overdose. This bill will take a strong look at fentanyl, which is an extremely deadly drug that severely contributes to the amount of opioid-related overdose deaths, and it is frequently laced into other drugs. There has been an increase in reports of distributors lacing crack cocaine with fentanyl, which has killed several people. In fact, some law enforcement officials are saying that the next wave of the addiction crisis is fentanyl-laced cocaine. The bill would require the GAO to study how online marketplaces and financial payment methods are being used for trafficking, how these illicit funds are repatriated into the formal banking system, the participants throughout the entire trafficking supply chain, and federal and state agency efforts to impede such activities. This study will provide Congress, law enforcement, and advocates with the information they need to detect traffickers, assist victims, and prevent overdoses. So again, I want to thank Congressman Vargas and Congressman Rothfuss for introducing this bipartisan legislation, and I urge support for this bill. I'll yield back the balance of my time.
Gentlelady yields back. For what purpose does the gentleman from Pennsylvania seek recognition?
Move to strike the last word.
Gentleman is recognized for 5 minutes.
I thank the chairman for yielding, and I want to thank my colleagues for their continued work to protect our financial system from criminal exploitation. I also want to thank Representative Vargas for his efforts on this issue, especially his work on the Find Trafficking Act that I am proud to co-sponsor. As my colleagues know, the Terrorism and Illicit Finance Subcommittee has worked hard this past year to examine how illicit financial networks currently operate, including how they are evolving through the exploitation of new technology and innovative payment systems. Virtual currencies, also called cryptocurrencies, have great potential in the future of financial transactions. They also present a major challenge because of the level of anonymity they provide during transactions, especially global transactions. The ability of criminals to transfer value using virtual currencies in an opaque manner has made them increasingly popular among human and drug traffickers on the dark web. The dark web has vastly increased the ease and ability for drug traffickers, and I might start calling these folks poison traffickers, given the lethality of fentanyl, to conduct their business. I see this with the fentanyl being manufactured in China and smuggled through the mail to western Pennsylvania. I have heard from law enforcement that some opioid addicts in my district are now seeking out synthetic opioids like fentanyl as the preferred drug of choice. This is literally a substance many times stronger than heroin and highly deadly. The opioid crisis has literally killed thousands of people in my district and hurt so many families and communities. Human traffickers also use the dark web to operate, and virtual currencies are unfortunately used in this evil trade that destroys the lives of countless victims. Relatedly, I would like to thank Representative Love for the briefing she helped lead regarding human trafficking this past year. Furthermore, as the TIF subcommittee has heard in prior hearings on transnational criminal organizations, I fear that TCOs and terrorist organizations will exploit virtual currencies even more going forward. The Find Trafficking Act authorizes the GAO to study how virtual currencies and new technology are exploited by criminals and traffickers to facilitate their illicit businesses. The results of this study will help Congress determine the best ways to prevent virtual currencies and other payments systems from being exploited by the traffickers. I encourage all of my colleagues to support the Find Trafficking Act, and I yield back the balance of my time.
Gentleman yields back. Who seeks recognition? For what purpose does the gentleman from Minnesota seek recognition?
I have an amendment at the desk.
We'll pause and allow the amendment to be distributed. The clerk will report the amendment.
Amendment offered by Mr. Emmer, page 2, strike lines 7 through 9, and insert the
Without
following.
objection, the reading of the amendment is dispensed with, and the gentleman from Minnesota is recognized on his amendment.
Thank you, Mr. Chairman. New innovations inevitably breed new opportunities, and with those new opportunities come, in many cases, new uncertainties. The biggest misconception, however, is that we should fear uncertainty. Today, the new innovations are virtual currencies and the technologies that underlie them. And to say there are uncertainties and misconceptions where virtual currencies are discussed would be an understatement. In recent months, I've tried to educate myself on these new innovations. I have also, in many hearings, briefings, and discussions, made it known that I believe members of Congress and federal regulators alike must get smart on the potential benefits of this emerging area of our technology, or they could get left behind. Decentralized currencies and their foundational technologies hold incredible potential in a number of arenas and may ultimately prove to be a means to truly restore power to the people. Nevertheless, with any new technology or currency, bad actors will seek ways to exploit it. Frankly, nowhere has that been more apparent than with the dollar, which to this day remains the most popular means of conducting illicit activities. That's why I'm pleased to work with my colleagues from California and Pennsylvania to offer this amendment, which will add 2 new study requirements to the GAO review ordered under this legislation. These additions call on the GAO to review how virtual currencies and their underlying technologies can be used to detect and deter illicit activities, as well as to determine the extent of the immutable and traceable nature of virtual currencies and how they contribute to the tracking and prosecution of illicit funding. By expanding the bill's review of virtual currencies to include their use in illicit activities as well as efforts to combat them, we as legislators will gain a better understanding of the potential for these innovations to help us detect and deter these heinous and unacceptable activities. New technologies will always be ripe with uncertainty. Amidst all of the evil that is associated with this uncertainty, let's not forget that those same technologies also have the potential to solve some of our most challenging problems and propel us into the future. Again, I want to thank Mr. Vargas and Mr. Rothfuss, as well as their staffs, for their work on this amendment, and I yield back the remainder of my time.
Gentleman yields back. For what purpose does the gentleman from California seek recognition?
I move to strike the last word, Mr.
Gentleman
Chairman.
is recognized for 5 minutes.
Thank you, Mr. Chairman. I thank everyone for their very constructive comments. I appreciate them very deeply, and especially for this amendment, I thank the gentleman from Minnesota. It improves the bill significantly, and certainly I not only accept it, but I thank him. I thank also the work that your staff has done. My understanding that my staff and your staff has worked very well at this, and I appreciate it again. And again, want to thank Mr. Rothfuss and his staff. My understanding is our 3 staffs have worked very closely on this. Thank you, Mr. Chairman. I yield back.
Gentleman yields back. Who seeks recognition? Is there further debate on the amendment? If there is no further debate on the amendment, the question now occurs on the amendment offered by the gentleman from Minnesota, Mr. Emmer. All those in favor shall signify by saying aye. Aye. And all those opposed shall signify by saying nay. In the opinion of the chair, the ayes appear to have it. The ayes have it, and the amendment is adopted. Is there further discussion on the underlying bill? If not, there being no further discussion or amendments to the bill, the question now occurs on ordering the bill as amended, reported to the House with a favorable recommendation. Those in favor shall signify by saying aye. Aye. All those opposed shall signify by saying nay. In the opinion of the chair, the ayes appear to have it. For what purpose does the gentleman from California seek recognition?
Thank you, Mr. Chairman. I ask for a recorded vote.
A recorded vote has been requested. All those in favor of a recorded vote shall raise their hand and be counted. Sufficient number having raised their hands, a recorded vote is so ordered, and pursuant to subsection C5 of Rule 3 of the committee rules, the vote on this question is postponed. Now, pursuant to notice, I call up H.R. 5749. The clerk will report the bill which was distributed in advance.
H.R. 5749, to require the appropriate federal banking agencies to increase the risk sensitivity of the capital treatment.
Without objection, the bill is considered read and open to amendment at any point. The chair recognizes the gentleman from Illinois, Mr. Holmgren, the sponsor of the legislation, for 5 minutes.
Thank you, Chairman. Chairman. Today I'm pleased to speak in support of H.R. 5749, the Options Market Stability Act. I first do want to thank Chairman Henserling for including this important and timely piece of legislation in the markup today. The policy changes called for under minor legislation have existed for some time, but the urgency has increased in recent months. Title VII of Dodd-Frank Act requires derivatives, including options, to be centrally cleared in order to take advantage of the risk mitigating benefits. Liquidity providers, many of which are in Illinois, can only trade through a clearing member. They cannot access clearinghouses directly. As a result, the role of clearing members and the amount of transactions cleared by these institutions has expanded significantly. The risk-based and leverage-based capital requirements for bank clearing members make it cost-prohibitive to provide clearing services for listed options. This is especially acute when there is higher than expected volume. Chicago Trading Company, one of the key liquidity providers for listed options, wrote in a letter to the Treasury Department last summer that, and I quote, "These requirements force banks to direct capital away from the exchange-listed, centrally cleared options market, thereby hindering our ability to provide liquidity and acting in direct contravention of a core principle of post-crisis regulation, strengthening exchange-based trading and central clearing, especially for many derivatives that were previously traded on an over-the-counter basis," end quote. The Options Market Stability Act requires the federal banking regulators to more accurately measure counterparty risk by adjusting the risk and leverage-based capital rules to, 1, provide for delta weighting on options, and 2, net correlated positions between counterparties for centrally cleared options. In principle, this is very similar to bipartisan legislation sponsored by Chairman Luke DeMeyer, which was considered in the committee earlier this year. During that markup, we spent ample time discussing the benefits, including price transparency of listed derivatives and the benefits of central clearing for transparency and mitigation of counterparty risk. While market participants have long expressed concerns about the current capital requirements for listed options, volatility in equity markets earlier this year exposed the extent to which existing rules are restricting liquidity when it is needed the most. Volatility contributes to an increase in volume of listed options because of an interest by market participants to hedge their positions. However, this binding capital constraint under current rules makes it cost prohibitive to centrally clear and the increased volume of equity options contracts demanded by the market. The market makers who provide liquidity for listed options are indirectly constrained by the bank capital rules from fulfilling their role in maintaining price stability. According, again, to Chicago Trading Company, I quote, "In extreme scenarios, these disproportionate reactions can lead to flash crashes, thereby threatening the credibility of the broader market and increasing financial systemic risk," end quote. Stability in our equity markets should be a priority, but we also should not lose sight of other asset classes that may experience volatility, whether it's due to geopolitical or macroeconomic events such as volatility in oil prices due to unrest in the Middle East or changes in other commodities as we reconsider our trade agreements. These things cannot be controlled by investors, so we should not have capital rules that make it more difficult for them to react and manage the risk. This is not just a conceptual or theoretical issue. There are real implications for everyday investors. This impairment of liquidity leads to higher costs for investors who are interested in using listed options. According to a May 7, 2018 story in the Wall Street Journal titled, "Traders Are Fleeing the Options Market," data from the Options Clearing Corporation and Hanweck Associates LLC demonstrates that bid-ask spreads have widened, suggesting that it's difficult for investors to get the best price. Higher prices will make it less likely for investors to make use of listed options. It'll be more costly to hedge their positions, and they may lose investment income as if they use trading strategies like the covered call. Central banks around the world, including the Federal Reserve, making up the Basel Committee on Banking Supervision, have acknowledged that there is a problem and have suggested a solution as part of an update of a myriad of capital rules for banks known as the Standardized Approach for Counterparty Credit Risk, or SACR. SACR was actually drafted with input from the Federal Reserve staff when it was under the leadership of Janet Yellen. This means the Fed has been aware of this issue facing options markets for over 4 years, but has not made it a priority. Problem and implementation of SACR could be as many as 5 years away. Our options markets are encountering liquidity issues now because of the poorly calibrated capital rules. Investors do not have the luxury of waiting any longer on our banking regulators. Again, the Options Market Stability Act calls for a capital offset in the risk and leverage-based capital rules that will do a better job of measuring counterparties' exposure for listed options. We accomplish this by 1, delta weighting, and 2, netting correlated positions. Finally, this legislation has a long list of supporters. CBOE, Global Markets, the Options Clearing Corporation, NASDAQ, NYSC, CME Group, SIFMA, Futures Industry, IMC, Chicago Trading, TD Ameritrade, many others. I would ask my colleagues to join in supporting this. It is an important measure, and it needs action now. It can't wait the 5 years. And with that, I yield back.
Time of the gentleman has expired. Who seeks recognition? For what purpose does the gentleman from Illinois seek recognition?
I have an amendment in the nature of a substitute at the desk.
We will pause and allow the amendment to be distributed. Clerk will report the amendment.
Amendment in nature is a substitute offered by Mr. Foster. Strike all after the enacting clause, insert the following.
Without objection, the
Section
reading of the amendment is dispensed with, and the gentleman is recognized on his amendment.
Thank you, Mr. Chairman. Mr. Chairman, my amendment would direct the bank regulators to promulgate a rule that will result in more accurate allocation of capital based on the riskiness of derivatives and options. I want to thank my fellow Illinoisan, Congressman Hultgren, for working with me on this. And thank you also to the ranking member and her staff for feedback that's resulted in a balanced set of criteria for the regulators to consider in writing this rule. Market makers in the options and derivatives markets provide necessary liquidity, particularly in times of volatility. They centrally clear their trades through bank clearing members. Clearing is not a high-margin enterprise for a bank, but it is a practice that we want to encourage for financial stability. The capital that a bank has to hold against this business line sometimes imposes constraints on a bank's ability to clear on behalf of market makers. This problem becomes especially acute during volatility, which is when we need market makers the most. There is today, appropriately, far more aggregate capital in the system than there was before the financial crisis. This is a good thing, and we should not reduce capital for its own sake. However, assessing the total notional value of positions and requiring capital to be held against it without looking at the riskiness of those positions can result in too little capital being held against the riskier positions and too much capital being allocated to low-risk positions. This distorts the economics in a way that unduly constrains market makers who balance their books at the end of the day. My amendment directs the regulators to adopt a calculation of counterparty credit risk, the risk that their clients will default, that will consider the different risk profiles of positions. The Federal Reserve agreed in 2014 to a framework to replace the current exposure method currently used with the standardized approach to counterparty credit risk, or SACR. SACR will enable a bank to allocate its capital against activities in a way that will promote central clearing and encourage market maker liquidity during times of stress. The volatility of February 4th of this year showed the constraints of the current SEM model when market makers had to take on intraday positions that put stress on the clearing members because of this capital allocation. When regulators promulgate a new standard consistent with SACR, internal allocations will make more economic sense. My amendment encourages them to expeditiously write this rule. I urge my colleagues to support my amendment and, upon its adoption, the underlying bill. Yield back the balance of my time.
Gentleman yields back. Who seeks recognition? For what purpose does the gentleman from Michigan seek recognition?
I move to strike the last word.
Gentleman is recognized for 5 minutes.
Thank you, and I want to both thank and congratulate my colleagues, Mr. Hultgren and Mr. Foster, for their work on this, and I know this has been a ways and a journey that everybody has been on, but I truly do believe that this will allow a more efficient use of capital, as Mr. Foster was discussing there a little bit. And quite honestly, it's a modest adjustment to the risk and leverage-based capital rules to better take into account the actual risk of those clearing options. And we've seen the Basel Committee on Banking recognize the problems with what is currently going on. It's just a fear that this is going to take years for any of those standards to be implemented from Basel, and here we are going to be able to make some positive steps on that. So I just wanted to take a moment and say thank you. Congratulations. I'm very supportive of the underlying bill as well as the amendment. I'm happy to yield to my friend from Illinois.
Thank you. Thank Chairman of the Capital Markets Subcommittee. And I also want to thank my friend and colleague from Illinois, Congressman Foster, for his work on this and accept the amendment. I do think this is important for us to move forward. I do think it's something that ought to move forward in a bipartisan way, so very grateful for his help on that. Bank regulators must stay focused. The status quo and inaction just isn't acceptable and truly, I think, is putting markets and investors at risk. So we understand that this amendment is important in order for us to gather as much support as we can to move forward. Again, waiting the 5 years for SACR to move on this, like we think they likely would, but we've seen just in the last months some market movement or days of high volatility that really could have ended up very badly for a lot of investors. And so again, grateful for my colleague and his work on this, and with that, would encourage all of my colleagues to support the amendment and also to support the underlying bill. With that, I yield back.
And I'm happy to recognize the chairman.
Yeah, if you would yield to the chairman. I thank the gentleman for yielding. I'll be brief. Again, this is a very, very modest adjustment, if not tweak, to the system. I think, frankly, it's common sense, particularly when it comes to netting. And as the gentleman from Illinois said with respect to his amendment, that this will help, I think, focus more on the capital that is necessary for a specific risk. And as the gentleman said, sometimes we're allocating too much capital, sometimes not enough. I think in many respects this will better help calibrate, but certainly netting is simply common sense. And when we have less liquidity, when we have more volatility, this is going to hurt our markets. That ultimately is going to be a drag on economic growth, is going to be a drag on jobs, it's going to be a drag on growing paychecks. So I want to thank the gentleman, both gentlemen from Illinois, and I think this might be the first time I've heard the term Illinoisian. So I think both of the Illinoisians, if that is the proper term, for working on a bipartisan.
Mr. Chairman, there are less polite terms that they refer to us in Wisconsin.
Reclaiming my time, as a Michiganian/Michigander, I just would like to encourage my friends from Illinois, as many in the Midwest also refer to them, to figure out which it might be, but that we can bring unity and harmony to all in the Midwest. But at the end of the day, this is truly a positive step, and we're glad to see that. And with that, Mr. Chairman, I'm happy to yield back.
Gentleman yields back. For what purpose does the California-nasian ranking member seek recognition?
Thank you, Mr. Chairman. I rise to thank Representative Foster for offering an amendment to instead require the bank regulators to conduct a rulemaking after considering several important factors, including the safety and soundness of the financial system, financial stability, and the impact of the changes on the broader capital regime. Unlike the underlying bill, which would only reduce capital, the amendment would direct the regulators to increase capital for riskier derivatives. It would also create a common sense retrospective rule review so that 5 years after implementation, the regulators would study the impact of their rule. And so I support this amendment, and thus I will support the bill with this amendment if it is adopted. And let me just say to the chairman and other members, I always look closely at bills where there is indications of capital reduction requirements, lessening the capital in any shape, form, or fashion. I think this amendment takes care of my concerns, and not only do I support the amendment, again, if the amendment is adopted, I support the bill.
Gentlelady yields back. For what purpose does the gentleman from Arkansas seek recognition?
Strike the last word.
Gentleman is recognized for 5 minutes.
Thank the chairman. I want to thank this pair of Illini for their extraordinary work on this, and just say how important it is, as we've moved 8 years from the passage of Dodd-Frank this July, to fine-tuning the efforts of Dodd-Frank to oversee the broad definition of derivatives, but where that went too far, where the Dodd-Frank Act was too complicated and went too far in trying to apply the proper balance of capital and liquidity. The gentlemen working together as good friends on this committee have, I think, made an important distinction, because our option market and the liquidity for the option market is fundamental to price discovery in our capital markets in the United States. It's fundamental to the U.S. being the leader in capital markets and the ability to raise capital across the world. And so this is the exact kind of common sense that benefits institutional and retail investors, because of the very important role that options play in price discovery and in hedging portfolios through covered call writing. So I commend my friends from Illinois, no matter what they're called. I call them friend, and I call them competent members of this committee, and I thank them for their work, and I yield to either gentleman from Illinois time as they may wish to claim. If not, I yield back to the chair.
The gentleman from Arkansas yields back. Is there any further debate on the amendment? For what purposes gentleman from Georgia seek recognition?
Strike the last word.
Gentleman's recognized for 5 minutes.
Mr. Chairman, first I want to thank Mr. Holgren and Mr. Foster for the amendment and the bill. As you recall, and has been mentioned, I was the lead Democratic sponsor with my Republican friend, Mr. Lukemeyer, on H.R. 4659, which did a very similar thing. We were able to get banking regulators to recognize the complexities of clear derivatives and encourage the greater use of the products themselves. I'm also the ranking member of the Agriculture Subcommittee that handles derivatives. And the major thing that we did with that bill and the work that we did on our derivatives subcommittee was that we were able to bring transparency to the over-the-counter marketplace. And as you recall, Mr. Chairman, that area was previously operating in the shadows of our financial system, and we brought it out in the sunlight. And this bill just simply allows the sun to shine even brighter, and to encourage the nation to expand the use of central clearing. Investments are risky, and our investors need tools to be able to manage that risk. And that's exactly what the bill does, bringing both transparency and not just transparency, Mr. Chairman, but stability. That's what our investors need to make sure that the markets and the investments are transparent and that they are stable as instruments of controlling the risks that are inherent in investing, particularly with interest rates. And so I just want to compliment both Mr. Foster and Mr. Holgren. Job well done.
Gentleman yields back. Is there further debate on the amendment? For what purpose does gentleman from Massachusetts seek recognition?
Thank you, Mr. Chairman. Strike the last word.
Gentleman is recognized for 5 minutes.
Thank you, Mr. Chairman. I do want to emphasize or amplify the importance of Mr. Foster's amendment here. I tell you the truth, I came here to vote against the underlying bill. I thought it presented serious danger to the American taxpayer. I think that it was very generous to some of the globally, systemically important banks, including J.P. Morgan, Citibank, Bank of America, Wells Fargo, Bank of New York Mellon, State Street, Morgan Stanley, Goldman Sachs, tens of billions of dollars to their bottom lines. But by doing so, the underlying bill would have shifted the risk to the American taxpayer. I think that I congratulate Mr. Holgren on recognizing that risk and recognizing the benefit of Mr. Foster's amendment. And You know, I just think this is a good example of how bipartisanship can end up with a better product and a better result for the American taxpayer. So I congratulate both these gentlemen for their work together, and I think that the American people have benefited by their cooperation and their thoughtful improvement on this bill, and I yield back.
Gentleman yields back. Is there further discussion or debate on the amendment? If not, the question now occurs on the amendment offered by the gentleman from Illinois, Mr. Foster. All those in favor shall signify by saying aye. Aye. All those opposed shall signify by saying nay. In the opinion of the chair, the ayes appear to have it. The ayes have it, and the amendment is adopted. Is there further discussion or amendments to the underlying bill? Seeing none, the question now occurs on ordering the bill as amended reported to the House with a favorable recommendation. Those in favor shall signify by saying aye. Aye. All those opposed shall signify by saying nay. In the opinion, for what purpose does the gentleman from Illinois seek recognition?
Ask for recorded vote.
Recorded vote has been requested. All those in favor of a recorded vote shall raise their hand and be counted. A sufficient number having raised their hands, a recorded vote is so ordered, and pursuant to subsection C5 of Rule 3 of the Committee Rules, the vote on this question is postponed. Now, pursuant to notice, I call up H.R. 6035. The clerk will report the bill, which is distributed in advance.
H.R. 6035, to direct the Securities...
Without objection, the bill is considered read and open to amendment at any point. The chair recognizes the gentleman from North Carolina, Mr. Budd, the sponsor of the legislation, for 5 minutes.
Thank you, Mr. Chairman. And thank you for your leadership on the regulatory relief package signed into law last month, and for your leadership on this upcoming package of bills focusing on capital formation, which hopefully includes some of the bills being marked up today. And I'm excited to play a small part in this with my WICSI legislation, the Streamlining Communications for Investors Act. And I look forward to marking it up today along with some other proposals. The Streamlining Communications Act for Investors Act would codify a rule that the SEC abandoned in 2009. That was largely uncontroversial. In my view, this proposal is still uncontroversial. At the time, the SEC proposed amending Rule 163 to allow WICSIs, or well-known seasoned issuers, to use underwriters under certain conditions to communicate on their behalf with investors instead of a securities offering. Unfortunately, that rule was never finalized due to the consideration of Dodd-Frank. The rationale for the 2009 rule was simple and, as I said, uncontroversial. And while WICSIs can communicate with prospective investors about their capital raising plans under Rule 163, not all WICSIs have the resources or knowledge of possible investors to allow them to assess investor interest in securities on their own. All the Streamlining for Communications for Investors Act does is extend one Rule 63 protection that currently exists for issuers to brokers and underwriters operating on behalf of a WICSI. By allowing brokers and underwriters to communicate with investors on behalf of WICSIs, issuers will be better able to gauge investor interest and arrange sales of registered securities ahead of filing their registration statements. This will make the capital raising process for public companies simpler and give grant issuers the flexibility to better time securities offerings to take advantage of market conditions. My bill would also improve investor-issuer communications and reduce the cost of accessing public capital, which is necessary to keep our public markets competitive with private ones. Finally, it is important to note that this measure would also not diminish investor protection. Registered securities grant investors important rights under the Securities Act, and investors would still receive these rights, even if the gun-jumping safe harbor that currently exists was extended to agents of a WICSI. The change to Rule 163 proposed in this legislation is essentially to ensure that investors can take advantage of an existing and helpful safe harbor to opportunistically raise capital. It is a common-sense reform that should improve the attractiveness of our public markets. I think it is important to remember that in 2009, the SEC said that revising the rule, like we do in this bill, in my bill, would benefit investors and was one reason they began the rulemaking process. This is a good policy and will benefit our economy, and I would urge all my Democrat colleagues to support my legislation as well. The bottom line is this: my legislation will make the capital raising process for public companies simpler, and the ability to flexibly raise capital at an advantageous time is something policymakers should be encouraging in our public capital markets, not discouraging. Mr. Chairman, I yield back.
Would you yield to the chairman?
I yield back to the
I
chairman.
thank the gentleman for yielding. I want to thank the gentleman from North Carolina for his leadership on this issue and so many other issues dealing with how do we get more capital into the system. I'm very happy that we have a booming economy today, but there are concerns on the horizon about the economy of tomorrow. We have half of the IPOs that we had about 20 years ago. As recently as 2016, entrepreneurship, launching new businesses, was at a 40-year low. The question is, where are the next Googles coming from? Where are the next Amazons coming from? So a lot of the work of this committee has to be about how do we ensure that more enterprises are launched? How do we ensure that more have the opportunity to go public? And once they go public, that they do not wither on the vine. And so companies aren't going to go public unless they know the destination is a good place. And so, number one, as the gentleman from North Carolina pointed out, this was a proposal of the Obama Securities and Exchange Commission. This is a proposal that dated back, I believe, when Mary Jo White was Shapiro, I'm sorry, was chair of the SEC. So this is where the idea came from. And it is a very simple question of agency, because the WICSE is already allowed to engage in this activity. Now the question is, can the message be more broadly distributed through an agent? It's very common sense. I hope it'll receive bipartisan support. Time of the gentleman has expired. Who seeks recognition? For what purposes does the ranking member seek recognition?
To strike the last.
Gentleman is
word.
recognized for 5 minutes.
Mr. Chairman and members, I'm opposed to this bill, and I will take a few minutes to talk about why. But as I said to my staff, it's quite an example of no matter how much you do for the biggest corporations, they continue to want more. This bill would allow underwriters and securities dealers acting on behalf of well-known seasoned issuers or WICSEs to offer securities to investors prior to registering the securities with the SEC. WICSEs are large corporations that are widely followed by analysts. The SEC has already granted WICSEs substantial accommodations from our federal securities laws, including the ability to quickly raise capital through the automatic shelf registration process without needing the SEC to approve the registration statement beforehand. Additionally, under SEC Rule 163, WICSEs enjoy the benefit of an SEC-created safe harbor from Section 5C of the Securities Act of 1933, which prohibits all offers in any form prior to the filing of a registration statement. The bill would extend the Rule 163 safe harbor to underwriters and dealers acting on behalf of the WICSE. I share the concerns raised by our Democratic witnesses during a recent Capital Markets Subcommittee hearing, which cautioned that expanding accommodations for large issuers like WICSEs would create a more uneven playing field for smaller companies seeking to access the public market and would further contribute to the decline in IPOs. Further, it was Mr. Cy Galash of Healthy Markets who testified during the hearing, and I quote, "Simply because a large corporation issuer is familiar with the regulators doesn't mean that the securities they offer are not risky, and the offering documents don't deserve all due scrutiny by the SEC staff and investors," end quote. I'm also concerned that H.R. 6035, which broadly applies to pre-registration offers for all types of securities, would impose unintended consequences on our markets. For example, in a comment letter to a similar 2009 proposal by the SEC, the Credit Roundtable pointed out that expanding Rule 163 would disadvantage investors in fixed income securities. According to the Credit Roundtable, amending Rule 163 to apply to underwriters and dealers, as H.R. 6035 would do, would, quote, exacerbate existing weaknesses in the fixed income offering process, in which institutional investors are often in the position of having to make an investment decision within minutes of learning of an offering without ready access to key disclosure documents, end quote. This committee should not be making it harder for investors to make informed decisions. For these reasons, I oppose the bill. And I'm going to request, Mr. Speaker, Mr. Chairman, that I have unanimous consent to enter into the record a letter from the Credit Roundtable in association with the fixed income formula opposing H.R. 6035, and I yield back.
Without objection.
My time.
For what purpose, the gentleman from Michigan seek recognition?
I move to strike the last word.
Gentleman is recognized for 5 minutes.
Well, thank you, Mr. Chairman. And I, too, much like you, wanted to point out that this was a Obama administration, Mary Shapiro, Securities and Exchange Commission era rule that was proposed. There was well thought out reasons for that. It simply is a codification of a proposal that was put in place, or that had been proposed, that was not formally adopted. And as has been indicated by the author, the current rules allow issuers to engage in these pre-filing communications, and underwriters are often best positioned to test the waters prior to an offering, and permitting these WICSEs to authorize an underwriter or dealer to communicate about offerings of the issuer's securities prior to the filing of the registration statement would help these companies better gauge investor interest and market conditions of what's going on before having to expend time and resources to file a formal registration statement. So this is about efficiencies within the market without, and I repeat, underline an exclamation point, without putting investors at risk or at any kind of greater risk in the system. And the SEC in 2009 observed removing certain impediments of these WICSEs that they face and reaching a broader group of prospective investors will enhance investor protections while retaining all of those important rights and remedies under the Securities Act, including available remedies under the Securities Act's Sections 11 and 12. So, again, as has been pointed out, Chair Shapiro at the time had suggested that these proposals be adopted. I'm going to read one other quick thing here. The SEC believed that current limitation of Rule 163, this is in 2009, has reduced the potential benefits of its 2005 offering reforms, which were intended to encourage issuers to register offerings with the SEC, and without doing so, it could actually lead such issuers to conduct unregistered offerings instead of registering those offerings. So, and again, without any sort of loss of the rights and remedies available under the Securities Act to investors in registered offerings. So this is about liquidity, this is about efficiency in the marketplace, but this is ultimately about making sure that investors are protected. And by protecting them and allowing them greater access, this actually helps the markets. And I don't know the answer to this, but I would be interested to know whether the ranking member was as vocally opposed to this proposal in 2009 when it was the other administration, and how about Chairman Frank at the time. So it seems to me it was good enough in 2009 with the Obama administration. It certainly ought to be good enough now, as we have seen even a longer-term effect on not putting these rules in place, what that has brought us. So with that, Mr. Chairman, I'm happy to yield to my Vice Chairman, Mr. Holtgren.
Thank you, Chairman Huizinga, and I also want to thank Chairman Henserling again for putting together a really important capital formation package as we move forward. Also want to thank Congressman Budd for his important work here. As has been stated, this really does make sense. This idea for this legislation goes back to 2009, and I think for one reason or another, likely a limit on the Commission's bandwidth caused by the financial crisis at the time. This important work was never finalized back then. So we heard testimony in the Capital Markets Subcommittee just a few weeks ago why Mr. Budd's legislation, which again essentially codifies the SEC's 2009 proposal, is so important. Testimony from the U.S. Chamber of Commerce noted, and I quote, "While current rules allow issuers to engage in pre-filing communication, underwriters are often best positioned to test the waters prior to an offering, allowing WICSEs to authorize an underwriter or dealer to communicate about offerings of the issuer's security prior to the filing of the registration statement would help these companies better gauge investor interest before having to expend the time and resources to file a formal registration statement. While the SEC's response to the financial crisis overtook Rule 163 reform as a priority and the 2009 proposal was never finalized, we believe this remains an important initiative that will help issuers raise capital. The Chamber strongly supports the draft legislation, which would simply codify the statute of the SEC's 2009 proposal." So, end quote. In addition, this legislation is supported by a lot of important groups, and so I would ask my colleagues to support the legislation and yield back.
Time of the gentleman from Michigan has expired. For what purpose does the gentleman from Massachusetts seek recognition?
Mr. Chairman, I'd like to strike the last word.
Gentleman is recognized for 5 minutes.
Thank you, Mr. Chairman. I think it's important to remember why the registration requirement was put in the first place is because some issuers were engaging in bait and switch, especially with smaller investors that didn't have the sophistication or the resources to really drill down on what was actually the underlying value of some of these offerings. So by requiring registration, there was sort of a vetting process that went on there. Now, that was to the benefit of the small investor, and it remains that way. Think about today, which we have an even more important priority because of the decline of defined benefit plans. You have a lot of people out there that are now forced to actively manage their own 401ks, their own thrift saving plans. So the people in the United States now are more reliant on accurate information than they ever have been in the past to make the right decisions. And so this proposal would allow issuers, and I want to go back. The reason we never got over the hump with Sheila Bair and the other efforts to sort of do Rule 163 reform is because when the SEC did a study, it found that the WICSEs were actually not filing accurate registrations on the type of securities that they were actually offering. And so that system wasn't working. We weren't getting accurate information under that system. And that's why we hit the speed bump. And I agree, we were moving towards that direction, but there were problems that the SEC identified. They found that many WICSEs had not filed automatic shelf registration statements or had filed registration statements that did not register all the types of securities that they wanted to offer to the public. So there was still misleading information. There was still bait and switch going on, and that's why we never got to the final rule. But I think...
Will the gentleman yield?
I'm sure. Absolutely.
I want to thank you for making that clarification that we never got a rule. This bill was never taken up. The opposite side never took up this bill. And also, I think it is very important to say that whenever some on the opposite side of the aisle think that somehow we should have supported something because they say Obama supported it.
Yeah.
They kind of throw that in our faces, and I just want to make it clear that we do not respond in that way, that we're looking for the best possible scenario for the citizens of this country, and regardless of who's proposing it or not proposing it, it has nothing to do with the fact that we have our own work to do, and I yield back the balance of my, I yield back.
Thank you. Reclaiming my time. I thank the gentlelady for her remarks. I also want to point out the Fed Chair, Chairman Powell, he cautioned us about, rapidly deregulating, and he said, this is a quote from him, "As you look around the world, U.S. banks and financial institutions, including the ones that are trying to be helped here, are competing very, very successfully. They're very profitable. They're earning good returns on capital. Their stock prices are doing well. So I'm looking for the case for some kind of evidence," and he said he's open to this, "some kind of evidence that regulation is holding these companies back." And he said, "I'm not really seeing that. I'm not seeing that case made at this point." So the people are saying we're going to hell in a handbasket and we got to deregulate. The evidence doesn't reflect that. These companies are as successful as they've ever been in their history. They're killing it. And it seems like we're falling all over ourselves here sometimes to give away more protections from the American public and small investors in order to help these big companies. I don't think that's the way we should be going. As I said before, a lot of people now are forced to self-manage their 401ks and make good decisions. This bill would deny them accurate information and would give these dealers greater leeway to provide misinformation in some instances. So with that, I yield back.
Gentleman yields back. For what purpose does the gentleman from Georgia seek recognition?
Strike the last word.
Gentleman is recognized for 5 minutes.
Thank you, Mr. Chairman. I want to thank my good friend and colleague, Mr. Budd, for bringing this forward. I heard the term rapid deregulation used. This is a slight change to an SEC rule to foster communication. I mean, it expands the ability to provide meaningful information so people can make wise decisions. Sometimes I think in this industry, it almost seems like we create regulations just to create a new acronym sometimes. This is a market of acronyms, and as we brought out, these WICSEs, you're already allowed to communicate with potential investors about raising capital. And all this does is expand that slightly to allow others to have valid information to make sure that these are valid and they're making wise decisions. And I see this as a corrective action. Not that the regulation was wholly in error, but it's a corrective action to make sure that we continue the economic growth that we're having right now. And there's no doubt that we're in an economic boom. And a lot of that is because of the corrective action that we're taking on this overbearing regulation. And I commend my colleague, Mr. Budd, for taking this up, and I fully support it, and I encourage all my colleagues.
Will the gentleman yield?
I will yield.
All right. I appreciate the gentleman yielding on that, and I too was struck by the notion of somehow defining this as, quote, rapid deregulation. Only in Washington, D.C. can you have a reform bill that was passed in 2005 and then have a rule proposed in 2009 to then maybe be implemented here in 2018 as, quote, rapid. This is what's one of the problems with government versus the speed of government versus the speed of business. I'm curious why some want to stop success, because those in the marketplace are doing well. Therefore, what? They shouldn't? I mean, what are we going to do about the next slowdown? Why would we not remove those barriers and those speed bumps if they don't make sense? If they don't put investors in greater harm's way? If we bring efficiencies to the marketplace? Because guess what, folks? We are on an international stage and a world marketplace where capital flows freely. And it's going to go to the place where A, it can get the most return, and B, it can be used most efficiently. Why would we not want to create that atmosphere here in the United States? And again, just pointing out that in 2005, with Commissioner, the chair, Chris Cox, former member in this body, he was working obviously under the Bush administration at the time when the SEC Securities Offering Reform Bill was put through. And then in 2009, after some review of this, Mary Shapiro and the Obama administration looked at a need to reform it, and obviously that got bogged down with the expansion of and dealing with what had happened in the downturn in the economy. that great recession that we saw. And it's now time to just return some common sense. These are not dramatic, earth-shattering kinds of changes and reforms, but they are important. And they're important because for years, so much sand has been thrown into the gears of business that it's time to add a little oil to that to make sure that that machine is running efficiently and smoothly, all while we protect investors, all while we make sure that they have the proper remedies that have been put in place, that have been in place since the 1930s, and that we've been trying to improve upon. So I commend my colleague and friend from North Carolina in his attempt to do so. I strongly support this, and because I think this is just common sense. And again, I just ask the rhetorical question, why wouldn't we want our capital markets to be functioning at the highest level that they possibly can, as efficiently and effectively as we can possibly make them as we compete on the world stage for that capital? So with that, I yield back to the gentleman from Georgia.
Well, I thank my friend from Michigan. I yield back to the chair.
Gentleman yields back. Is there any further discussion? There being no further discussion or amendments to the bill, the question now occurs on ordering the bill reported favorably to the House. Those in favor shall signify by saying aye. Aye. All those opposed shall signify by saying nay. In the opinion of the chair, the ayes appear to have it. For what purpose does the gentleman from North Carolina seek recognition? Recorded vote has been requested. All those in favor of recorded vote shall raise their hand and be counted. Sufficient number having raised their hands, a recorded vote is so ordered, and pursuant to subsection C5 of Rule 3 of the committee rules, the vote on this question is postponed. The chair will not call up further bills. We do not anticipate there will be recorded votes at 11:30. Pending that, the committee stands in recess, subject to the call of the chair.
Excuse me, I'm new to this.
The committee will come to order. We will now resume our consideration of pending matters. I now call up H.R. 5953. The clerk will designate the bill by title.
H.R. 5953, to provide regulatory relief to charitable organizations that provide housing assistance and for other purposes.
Question is now on reporting the bill H.R. 5953 favorably to the House. The clerk will call the roll.
Mr. McHenry. Mr. King. Mr. King, aye. Mr. Royce. Mr. Royce, aye. Mr. Lucas. Mr. Lucas, aye. Mr. Pierce. Mr. Pierce, aye. Mr. Posey. Mr. Posey, aye. Mr. Lukemeyer. Mr. Lukemeyer, aye. Mr. Huizenga. Mr. Huizenga, aye. Mr. Duffy. Mr. Duffy, aye. Mr. Stivers. Mr. Stivers, aye. Mr. Holgren. Mr. Holgren, aye. Mr. Ross. Mr. Ross, aye. Mr. Pittenger. Mr. Pittenger, aye. Ms. Wagner. Mr. Barr. Mr. Barr, aye. Mr. Rothfuss. Mr. Rothfuss, aye. Mr. Messer. Mr. Tipton. Mr. Tipton, aye. Mr. Williams. Mr. Williams, aye. Mr. Poliquin. Mrs. Love. Mr. Hill. Mr. Emmer. Mr. Emmer, aye. Mr. Zeldin. Mr. Zeldin, aye. Mr. Trott. Mr. Loudermilk. Mr. Loudermilk, aye. Mr. Mooney. Mr. Mooney, aye. Mr. MacArthur. Mr. MacArthur, aye. Mr. Davidson. Mr. Davidson, aye. Mr. Budd. Mr. Budd, aye. Mr. Kustoff. Mr. Kustoff, aye. Ms. Tenney. Ms. Tenney, aye. Mr. Hollingsworth. Mr. Hollingsworth, aye. Ms. Waters. Ms. Waters, aye. Mrs. Maloney. Mrs. Maloney, aye. Ms. Velasquez. Ms. Velasquez, aye. Mr. Sherman. Mr. Sherman, aye. Mr. Meeks. Mr. Meeks, aye. Mr. Capuano. Mr. Capuano, aye. Mr. Clay. Mr. Clay, aye. Mr. Lynch. Mr. Lynch, aye. Mr. Scott. Mr. Scott, aye. Mr. Green. Mr. Green, aye. Mr. Cleaver. Mr. Cleaver, aye. Ms. Moore. Mr. Ellison. Mr. Perlmutter. Mr. Perlmutter, aye. Mr. Himes. Mr. Himes, aye. Mr. Foster. Mr. Kildee. Mr. Kildee, aye. Mr. Delaney. Mr. Delaney, aye. Ms. Sinema. Ms. Sinema, aye. Mrs. Beatty. Mr. Heck. Mr. Vargas. Mr. Vargas, aye. Mr. Gottheimer. Mr. Gottheimer, aye. Mr. Gonzalez. Mr. Christ. Mr. Christ, aye. Mr. Kewen. Mr. Kewen, aye. Mr. Chairman.
Aye.
Chairman, aye.
Is there any member who has not voted? The gentleman from Maine.
Mr. Poliquin. Mr. Poliquin, aye.
Gentleman from Arkansas.
Aye.
Mr. Hill, aye.
Gentlelady from Utah? Nope. Gentleman from Illinois.
Mr. Foster, aye.
Is there any other member who has not voted? Is there any member who wishes to change his or her vote? If not, the gentlelady from Utah.
Mrs. Love, aye.
Is there any member who has not voted? Any other member wishes to change his or her vote? If not, the clerk will. Gentlelady from Missouri.
Mrs. Wagner. Yes. Mrs. Wagner, aye.
Gentlelady from Wisconsin.
Ms. Moore, aye.
The clerk will report.
Mr. Chairman, the ayes are 53 and the nays are 0.
Majority having voted in favor of the bill is ordered favorably reported to the House. Without objection, a motion to reconsider is laid on the table. Staff are authorized to make technical or conforming changes, and members will have 2 days to file views on the reported measure. The committee will come to order, please. I now call up H.R. 6069. The clerk will designate the bill by title.
H.R. 6069, to require the Comptroller General of the United States to carry out a study on how virtual currencies and online marketplaces are used to buy, sell, or facilitate the financing of goods or services associated with sex trafficking or drug trafficking and for other purposes.
Question now on reporting the bill H.R. 6069 as amended favorably to the House. The clerk will call the roll.
Mr. McHenry. Mr. King. Mr. King, aye. Mr. Royce. Mr. Royce, aye. Mr. Lucas. Mr. Lucas, aye. Mr. Pierce. Mr. Pierce, aye. Mr. Posey. Mr. Posey, aye. Mr. Lukemeyer. Mr. Lukemeyer, aye. Mr. Huizenga. Mr. Huizenga, aye. Mr. Duffy. Mr. Duffy, aye. Mr. Stivers. Mr. Stivers, aye. Mr. Holgren. Mr. Holgren, aye. Mr. Ross. Mr. Ross, aye. Mr. Pittenger. Mr. Pittenger, aye. Mrs. Wagner. Mrs. Wagner, aye. Mr. Barr. Mr. Barr, aye. Mr. Rothfuss. Mr. Rothfuss, aye. Mr. Messer. Mr. Tipton. Mr. Tipton, aye. Mr. Williams. Mr. Williams, aye. Mr. Poliquin. Mr. Poliquin, aye. Mrs. Love. Mrs. Love, aye. Mr. Hill. Mr. Hill, aye. Mr. Emmer. Mr. Emmer, aye. Mr. Zeldin. Mr. Zeldin, aye. Mr. Trott. Mr. Loudermilk. Mr. Loudermilk, aye. Mr. Mooney. Mr. Mooney, aye. Mr. MacArthur. Mr. MacArthur, aye. Mr. Davidson. Mr. Davidson, aye. Mr. Budd. Mr. Budd, aye. Mr. Kustuff. Mr. Kustuff, aye. Ms. Tenney. Ms. Tenney, aye. Mr. Hollingsworth. Mr. Hollingsworth, aye. Ms. Waters. Ms. Waters, aye. Mrs. Maloney. Mrs. Maloney, aye. Ms. Vasquez. Ms. Vasquez, aye. Mr. Sherman. Mr. Sherman, aye. Mr. Meeks. Mr. Meeks, aye. Mr. Capuano. Mr. Capuano, aye. Mr. Clay. Mr. Clay, aye. Mr. Lynch. Mr. Lynch, aye. Mr. Scott. Mr. Scott, aye. Mr. Green. Mr. Green, aye. Mr. Cleaver. Mr. Cleaver, aye. Ms. Moore. Ms. Moore, aye. Mr. Ellison. Mr. Perlmutter. Mr. Perlmutter, aye. Mr. Himes. Mr. Himes, aye. Mr. Foster. Mr. Foster, aye. Mr. Kildee. Mr. Kildee, aye. Mr. Delaney. Mr. Delaney, aye. Ms. Sinema. Ms. Sinema, aye. Mrs. Beatty. Mr. Heck. Mr. Vargas. Mr. Vargas, aye. Mr. Gottheimer. Mr. Gottheimer, aye. Mr. Gonzalez. Mr. Christ. Mr. Christ, aye. Mr. Kewen. Mr. Kewen, aye. Mr. Chairman.
Aye.
Chairman, aye.
Is there a member has not voted? Any member wish to change his or her vote? If not, the clerk will report.
Mr. Chairman, the ayes are 53 and the nays are 0.
Majority having voted in favor of the bill as amended, the bill as amended is ordered favorably reported to the House. Without objection, a motion to reconsider is laid on the table. Staff are authorized to make technical or conforming changes, and members will have 2 days to file views on the reported measure. Now call up H.R. 5749. The clerk will designate the bill by title.
H.R. 5749, to require the appropriate federal banking agencies to increase the risk sensitivity of the capital treatment of certain centrally cleared options and for other purposes.
The question now is on reporting the bill, H.R. 5749, as amended favorably to the House. The clerk will call the roll.
Mr. McHenry. Mr. King. Mr. King, aye. Mr. Royce. Mr. Royce, aye. Mr. Lucas. Mr. Lucas, aye. Mr. Pierce. Mr. Pierce, aye. Mr. Posey. Mr. Posey, aye. Mr. Lukemeyer. Mr. Lukemeyer, aye. Mr. Huizenga. Mr. Huizenga, aye. Mr. Duffy. Mr. Duffy, aye. Mr. Stivers. Mr. Stivers, aye. Mr. Holgren. Mr. Holgren, aye. Mr. Ross. Mr. Ross, aye. Mr. Pittenger. Mr. Pittenger, aye. Mrs. Wagner. Mrs. Wagner, aye. Mr. Barr. Mr. Barr, aye. Mr. Rothfuss. Mr. Rothfuss, aye. Mr. Messer. Mr. Tipton. Mr. Tipton, aye. Mr. Williams. Mr. Williams, aye. Mr. Poliquin. Mr. Poliquin, aye. Mrs. Love. Mrs. Love, aye. Mr. Hill. Mr. Hill, aye. Mr. Emmer. Mr. Emmer, aye. Mr. Zeldin. Mr. Zeldin, aye. Mr. Trott. Mr. Loudermilk. Mr. Loudermilk, aye. Mr. Mooney. Mr. Mooney, aye. Mr. MacArthur. Mr. MacArthur, aye. Mr. Davidson. Mr. Davidson, aye. Mr. Budd. Mr. Budd, aye. Mr. Kustuff. Mr. Kustuff, aye. Ms. Tenney. Ms. Tenney, aye. Mr. Hollingsworth. Mr. Hollingsworth, aye. Ms. Waters. Ms. Waters, aye. Mrs. Maloney. Mrs. Maloney, aye. Ms. Vasquez. Ms. Vasquez, aye. Mr. Sherman. Mr. Sherman, aye. Mr. Meeks. Mr. Meeks, aye. Mr. Capuano. Mr. Capuano, aye. Mr. Clay. Mr. Clay, aye. Mr. Lynch. Mr. Lynch, aye. Mr. Scott. Mr. Scott, aye. Mr. Green. Mr. Green, aye. Mr. Cleaver. Mr. Cleaver, aye. Ms. Moore. Ms. Moore, aye. Mr. Ellison. Mr. Perlmutter. Mr. Perlmutter, aye. Mr. Himes. Mr. Himes, aye. Mr. Foster. Mr. Foster, aye. Mr. Kildee. Mr. Kildee, aye. Mr. Delaney. Mr. Delaney, aye. Ms. Sinema. Ms. Sinema, aye. Mrs. Beatty. Mr. Heck. Mr. Vargas. Mr. Vargas, aye. Mr. Gottheimer. Mr. Gottheimer, aye. Mr. Gonzalez. Mr. Gonzalez, aye. Mr. Chris. Mr. Chris, aye. Mr. Kewen. Mr. Kewen, aye. Mr. Chairman.
Aye.
Chairman, aye.
Is there any member who has not voted? Any member wish to change his or her vote? If not, the clerk will report.
Mr. Chairman, the ayes are 54 and the nays are 0.
A majority having voted in favor of the bill as amended, the bill as amended is ordered favorably reported to the House. Without objection, a motion to reconsider is laid on the table. Staff are authorized to make technical or conforming changes. Members have 2 days to file views on the reported measure. Now call up H.R. 6035. The clerk will designate the bill by title.
H.R. 6035 to direct the Securities and Exchange Commission to revise Section 230.163 of Title 17 Code of Federal Regulations to apply the exemption offered in such section to communications made by underwriters and dealers acting by or on behalf of a well-known seasoned issuer.
Question now is on reporting the bill H.R. 6035 favorably to the House. The clerk will call the roll.
Mr. McHenry. Mr. King. Mr. King, aye. Mr. Royce. Mr. Royce, aye. Mr. Lucas. Mr. Lucas, aye. Mr. Pierce. Mr. Pierce, aye. Mr. Posey. Mr. Posey, aye. Mr. Lukemeyer. Mr. Lukemeyer, aye. Mr. Huizenga. Mr. Huizenga, aye. Mr. Duffy. Mr. Duffy, aye. Mr. Stivers. Mr. Stivers, aye. Mr. Hulkren. Mr. Hulkren, aye. Mr. Ross. Mr. Ross, aye. Mr. Pittenger. Mr. Pittenger, aye. Mrs. Wagner. Mrs. Wagner, aye. Mr. Barr. Mr. Barr, aye. Mr. Rothfuss. Mr. Rothfuss, aye. Mr. Messer. Mr. Tipton. Mr. Tipton, aye. Mr. Williams. Mr. Williams, aye. Mr. Poliquin. Mr. Poliquin, aye. Mrs. Love. Mrs. Love, aye. Mr. Hill. Mr. Hill, aye. Mr. Emmer. Mr. Emmer, aye. Mr. Zeldin. Mr. Zeldin, aye. Mr. Trott. Mr. Loudermilk. Mr. Loudermilk, aye. Mr. Mooney. Mr. Mooney, aye. Mr. MacArthur. Mr. MacArthur, aye. Mr. Davidson. Mr. Davidson, aye. Mr. Budd. Mr. Budd, aye. Mr. Kustoff. Mr. Kustoff, aye. Ms. Tenney. Ms. Tenney, aye. Mr. Hollingsworth. Mr. Hollingsworth, aye. Ms. Waters. Ms. Waters, no. Mrs. Maloney. Mrs. Maloney, no. Ms. Vasquez. Ms. Vasquez, no. Mr. Sherman. Mr. Sherman, no. Mr. Meeks. Mr. Meeks, no. Mr. Capuano. Mr. Capuano, no. Mr. Clay. Mr. Clay, no. Mr. Lynch. Mr. Lynch, no. Mr. Scott. Mr. Scott, no. Mr. Green. Mr. Green, no. Mr. Cleaver. Mr. Cleaver, no. Ms. Moore. Ms. Moore, no. Mr. Ellison. Mr. Perlmutter. Mr. Perlmutter, no. Mr. Himes. Mr. Himes, no. Mr. Foster. Mr. Foster, no. Mr. Kildee. Mr. Kildee, no. Mr. Delaney. Mr. Delaney, no. Ms. Sinema. Ms. Sinema, no. Mrs. Beatty. Mr. Heck. Mr. Vargas. Mr. Vargas, no. Mr. Gottheimer. Mr. Gottheimer, no. Mr. Gonzalez. Mr. Gonzalez, no. Mr. Chris. Mr. Chris, no. Mr. Kewen. Mr. Kewen, no. Mr. Chairman.
Aye.
Chairman, aye.
Is there a member who has not voted? Any member who wishes to change his or her vote? If not, the clerk will report.
Mr. Chairman, the ayes are 31 and the nays are 23.
A majority having voted in favor of the bill is ordered favorably reported to the House. Without objection, a motion to reconsider is laid on the table. Staff are authorized to make technical or conforming changes. Members will have 2 days to file views on the reported measure. There being no further business pending before the committee stands adjourned.